Shoppers are still flocking to Walmart, but America's largest retailer is sounding cautious about the future amid an uncertain macroeconomic backdrop. The store's earnings follows suit of other retailers like Target, TJX, and Home Depot, all beating on the top and bottom lines this week. But the market reaction has been mixed. We know that. Here to break down is Ed Yruma, analyst at Piper Sandler. Ed, let me bring you in here, and you're the perfect guy, Ed, to talk about this. You know these names backwards and forwards. As you look through the reports, Walmart and Target, what were your big takeaways, Ed? What did it tell you about the state of the consumer right now?
Look, I mean, as you guys mentioned earlier, the consumer is being very choiceful. They're being selective in terms of what they're buying. Obviously, there's continued pressure on the consumer from things like inflation, that even though there are pockets of areas where we're seeing deflation and disinflation, it's still, when you look on a 2 or 3 year basis, still it's a very difficult environment for the consumer. So I think when you kind of net all that out, you're ending up with a holiday season that, potentially is kind of lackluster.
And so how is that going to play out for the likes of a Walmart versus Target? And obviously, we've seen such an interesting discrepancy in reaction here. One could argue, in some ways, Walmart actually did better, but expectations were already high going into the quarter, and Target was the opposite. But I don't know what that tells us now about how the holidays are going to be for these guys.
For Walmart, they kind of introduced this theme, and we've started to grapple with it, of what happens to grocery in a deflationary environment, right? It's clearly been a nice comp tailwind for them. They benefited because you drive more, footsteps in the door, and then you can buy other things within the store. So Walmart, has clearly been a strong beneficiary, I think, of stronger grocery trends. Now, they would argue that if we get deflation, then that's more money that the consumer can spend elsewhere and hopefully spend at Walmart. But I think it's just a different shift that the investors having to kind of grapple with. On the other hand, Target, right, it was kind of a low bar, and I think they kind of exceeded that low bar, right? They had a very difficult time last year. They are more discretionary, right? They don't have the same food penetration, and so if discretionary trends get better, you could make the argument that Target is more leveraged to that than someone like a Walmart, which has both grocery and discretionary.
And Ed, what about these comments from Walmart execs, specifically when they talked about perhaps deflation in the months ahead is what they might be seeing? What would that mean, Ed, for Walmart's business and margins, if that's true?
Look, that's the big question, right? So clearly deflation will impact top line. And the question is does the consumer buy more units, right? And so you could see a scenario where maybe you buy an extra toy or two for your kids, but probably not buying an extra bottle of ketchup, right? So I think there are some areas where there is elasticity and you'll buy more units. There are other areas where you're just going to put that money back in your pocket. And so I think that's something that, again, we're having to work through our models and think through because it's an environment that, candidly, we haven't seen in a while.
And so, Ed, your coverage universe is pretty diverse within retail, right? You cover a Walmart and Target and a TJX, who we just heard from as well. But you also cover Warby Parker. You cover some of the resale companies like a ThredUp and a RealReal. As you look at the ones that we've heard from thus far and the sort of ensemble, who in that universe can do well in this environment, or at least better in this environment?
I mean, I think TJX continues to take market share, right? That very strong results yesterday. They're taking share within apparel. They're taking share within home. And we think from some of these Bed Bath & Beyond stores that have closed. Interestingly, they also highlighted beauty as an opportunity, right? This is a category that off-price hasn't traditionally been as strong in. And as we visit their stores, we see them making significant headway there. And so that's a big opportunity for them. So I think someone like a TJX, because the consumer wants these products, right? They want apparel, they want beauty, they want home, they want this for the holiday, but they want to be careful with what they spend. And I think TJX offers consumers great value.
And Ed, what about this other issue of, we heard so much about shrink, retail theft. In your coverage universe, Ed, does that issue seem to be more in control now?
I don't want to say more in control. I would just say it's less surprising, right? I think we're starting to see the curve flatten out. I think we're starting to hear more about local municipalities that understand that if this problem isn't dealt with, then they will lose stores in their cities. And so it does seem like the retailers, local governments are at least more aligned than they were 12 months ago. So I don't think it's not a problem. I think shrink levels are still elevated. We haven't seen them come down, but they're not increasing the way that they did last year.
Does it feel like that problem is kind of, the peak of it is behind us?
It's possible, right? And ultimately, a retailer would tell you that the consumer will pay for shrink, right? It will get added to the cost of an item. And so if shrink rates are stable, then retailers can kind of price against that. So it does feel like hearing them call it out on conference calls as being a headwind to the business is probably largely behind us.
Ed Yruma, thank you so much, Ed, for joining us today for that time and insight. We really appreciate it.
Thanks.